Here we have the daily price chart for Bitcoin, cryptocurrency ticker BTC. This chart is in relation to the US dollar. So here we can see that prices continue to remain under selling pressure. This is not at all surprising if you've been watching the prior videos. All of these price targets that we're discussing have been hit, almost to the penny. So here we're going to look at some of these price projections here and try to figure out where prices are headed next and whether or not Bitcoin is likely to start to see a turnaround here soon. Okay, so as we can see here, the level that I've been pointing to again and again and again, and I'm sure people are getting annoyed with it at this point, probably tired of hearing it, but I cannot emphasize enough the importance of this level at 56,500. This is the support zone that I have been pointing to for quite a while now, and we're currently trading into levels that are extremely close to this price point. So if we're looking at the most recent daily candle, the lows here are coming in at 56,709. So we're less than $110 away from this current target here, and a test of this level. I've been saying this over and over again, is just about as close to inevitable as you can get. There are many reasons for this. We're seeing lower highs on the daily chart. We're seeing a break below all of the major moving averages. And you have to remember, this is the daily chart. So each of these lines here represents a daily moving average. Yellow line is 20-day, orange line is 50-day, purple line is 100-day, and the blue line is the 200-day exponential moving average. These are closely watched moving averages by the entire market. The most common trading charts are the hourly charts and the daily charts. So what that means is that everybody that's looking at moving averages probably aware of these breaks in some sense. So to say that the market is not aware that of the fact that prices in Bitcoin are moving below the moving average cluster, I find that really hard to believe. The downside momentum here is obvious and it's clear. So we're below all the exponential moving averages. And as you can see here, we did also break below the 200-day exponential moving average. It's difficult to see there, but we did actually get a close below there. We clearly saw price lows extend beyond there. In situations like this with technical analysis, what you're really looking for is to see whether or not prices close outside of these levels. And it's minimal, but prices did close outside of here, and then we did get a fairly significant spike lower below that level. So, in my view, this 200-day exponential moving average, that support has been eroded. It's gone. It cannot be relied upon for bounces here. So, the next level to the downside is roughly $110 lower. I've been pointing to it again and again, and I know people probably don't want to hear it, but this is where we're headed next. The reason I was pointing to this level is because it was coming into contact with this 200-day exponential moving average, and it's also roughly in line with the 50% retracement of this prior bull move. If you watch my videos, you know that the way that I look at these trends is that I look at the prior dominant move, whichever direction it's in, if it's positive or negative. And then, I continue to watch that move as the most influential price move until it either breaks to the top side or lower, depending on if it's bullish or bearish, or if that entire price move retraces itself. So one of those two things has to occur. You either need a break to the top side or lower, or you need to see that move retrace itself. So here, what that would mean is that we would need to see a break above the all-time highs. Which come in at just below 74,000. I'm seeing 73,835 on the Coinbase chart. So we would either need to see a break of that level. I would even be content with a break of one of these lower highs here, to be honest, at this point. But that's not in the cards here. We are looking at a test of this 56,500 level. But in order for me to change my bias here, this would either need to break to the top side, or we would need to see this move retrace itself to the downside. One of those two things would have to occur in order for me to kind of revise my new trend outlook for where we stand currently. If we do see this level tested, it will mean, on the positive side here, it will mean that half of this move has already retraced itself. So if we're looking at the lows from January, later January came in just above $40,000. Let's try to get a number here. I'm seeing 40,144 as the price low, and then just below 74,000 as the price high. So if we're using that as the dominant move here, that's this kind of white line here, kind of outlining that. We would see that where we're trading now, we've retraced roughly 50% of that move. So that's a fair amount of ground that's been ceded here, given up. And it's possible that you could see a bounce here. And it was more possible before we saw this 200-day exponential moving average break, because prior to this, you did have a historical level, and you had the 50% retracement, and you had the 200-day exponential moving average. But the problem currently is the fact that we've now lost this 200-day exponential moving average, so we're below all of the moving averages. So momentum is focused on the downside, and this is being confirmed by the indicator reading. Don't shoot the messenger here. I mean, these are where the signals are pointing. So from here, we have to look at potential turnaround points. And this isn't the worst news in the world. I mean, if you're looking to build a position or add to your position, or if you got in at upper levels and you want a dollar cost average, declines are healthy, and they do allow the uptrend to kind of reinvigorate itself. So from here, I do expect this 56,500 target to be hit, unfortunately. But we have to start looking at further levels to the downside to start looking for potential bases in Bitcoin. So in particular, the first level that I would be watching comes in just below 52,000. Why do I point to that level? Well, if we're using this as the dominant move here, just 51,860 would represent the 61.8% Fibonacci retracement of this entire move. Okay, and in my view, the 618 is the most important Fibonacci level to watch. It's what most of the Fibonacci sequence is based on. It's kind of the most foundational level that can be found for this type of analysis. So, in my view, this is the most important level to the down. In any Fibonacci retracement. So if we're looking at this price structure specifically, the next level of support that I would see to the downside, as long as this 56,500 level breaks, the next level I would be watching to the downside comes in just below 52,000. From there, you've also got the psychological figure at 50K. So I would expect some support to start developing in those areas. But as long as we break my price level here at 56,500, I'm looking at probably a move that extends slightly below 52,000 at the minimum. So here's the current price analysis for Bitcoin, cryptocurrency ticker BTC.